Hello everyone, welcome to EduTap. So in today's session, we are going to continue with the report that the RBI has released on the trend and progress of the banking in India 2020-21. Okay, so we have already discussed the highlights of the report regarding the scheduled commercial banks, regarding the cooperative banks and the other banks. And in today's session, we will discuss about the highlights of the report regarding the non-banking financial companies, the resolution of stressed assets, the highlights on the climate change and the other issues that has been discussed in the report. So now, before starting with the session, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. As well as if you have not seen the previous session in which we discussed about the highlights of the report regarding the banks, please go and see that video first. Then you will be easily able to understand this session also, okay? Because the basics were discussed in the previous session. So now starting with the highlights of the report regarding the non-banking financial companies. See, when we were discussing about the scheduled commercial banks, we discussed that the scheduled commercial banks were not doing much credit growth because they were apprehensive that if they give the loans in the COVID situation, the loans will turn into NPAs because the people do not have enough leverage to give back the money. They are losing their jobs, the companies are shutting down. So they were afraid to do the credit growth. But at that time, the NBFCs, that the non-banking financial companies, were the ones that were doing the credit growth even at that time, even the time of the COVID. Okay, so the NBFC's consolidated balance sheet expanded during the 2020-21, driven by the credit growth and the investments, okay, of non-deposit taking. Here we are talking about the NBFCs that are non-deposit taking, that are not taking the deposit and that are systematically important. Now, which NBFCs are systematically important that are not taking the deposits and is greater than 500 crore of the asset size? Okay, in the Phenomics video, when I was telling you about the NBFCs, I told you that all the NBFCs that are taking the deposit are systematically important. But the NBFCs that are not taking the deposit are systematically important if they have the asset size greater than 500 crores. So their asset quality and the capital buffers also improved at that time. Okay, at that time you must remember that the RBI was also giving relaxations regarding the NPAs, that your asset won't be classified as a NPA because at that time the people were not in a situation where they can give back the previous loans or they can give back the interest payment of the previous loans. So at the time of the COVID, when the lockdown was starting and during the 2020-21 also, the RBI gave the relaxations that okay, if they are not giving the loan back or if they are delaying their payment, it's okay. That later on we will see to it, and later on they have to do it when the economy will start working again. So the NPAs at that time, the asset classification was stopped and the assets were not classified as NPA even if the loan is not coming back, even if the interest rate is not coming back. So at that time the asset quality was fine. But it is said that going forward, when the relaxations by the RBI will be taken back, that is when the policy measures will be unwinded, when the policy measures will end from the RBI regarding the relaxations. So this sector, that is the NBFCs, may have to grapple with higher delinquency because they have done the credit growth at the time where they have given, like during the COVID, they gave the credit too much. They did the credit growth that was good at that time, but there were many cases, there will be many cases where the credit will not come back because the people are not in a situation to give back the credit. Okay, so there can be very high delinquency ratio also, that is the NPAs will form much more in the NBFC's case, okay, because they gave the credit at a situation where the COVID was quite high and the people lost their money at that time also. So this is the situation, and the RBI knows that the NBFCs are very important for the country. Okay, so the RBI and the financial sector especially. So the RBI has implemented the scale-based regulation and it has brought new regulations for the NBFCs, like the scale-based regulatory framework. The PCA framework is also introduced for the NBFCs to enhance the regulatory oversight over the sector, over the NBFCs, and the scale-based regulatory framework will be effective from October 2022. So this is all about NBFCs, that they were doing the credit growth even at the time of the COVID, and it is said that at that time their asset quality was good, their capital buffers were good, but now going forward it might happen that the delinquency ratio will move up, because the RBI will stop the relaxations that it has given at that time. So next is the structure of the non-banking financial companies under the Reserve Bank's regulations. So this structure is provided by the RBI, that the non-banking financial institutions include all the India financial institutions, the 4, and non-banking financial companies, that are 9,680, and the primary dealers are also there. So in this also there are deposit taking NBFCs that are only 52. There are non-deposit taking NBFCs that are divided into systematically important because they are more than 500 crore of the asset size, and the other NBFCs that are non-deposit taking and that are not systematically important because they must have the asset size less than 500 crore. So this is the structure of the NBFCs that is provided by the RBI. Okay, you can take the screenshot, or later on this will be provided in the PDF in the Telegram group, so you can see at that time also. So highlights of the report: resolution of stressed assets, that how the NPAs will be resoluted. So at the time during the COVID also, the Reserve Bank announced resolution frameworks 1.0 and 2.0 to provide the relief to the borrowers and the lending institutions, that we will try to resolute the stressed assets that you have. Okay, as well as at that time what happened, that the fresh proceedings under the IBC, Insolvency and Bankruptcy Code, was stopped. Okay, it was suspended for some time, that no new fresh proceedings should start under the IBC. But in March 24, 2021, this suspension was lifted up, and now new proceedings can again start in the NBFC, and the creditors can again leverage on the IBC mechanism for the resolution of stressed assets, that the creditors can again depend on the IBC to resolute the stressed assets. It was suspended at the time of the COVID, and this expired. The suspension expired in March 24, 2021. The NARCL, that is a bad bank, which we also discussed in one of my video. So this was also made for the resolution of the stressed asset. Okay. So this is how the resolution of the stressed asset is shown by the RBI, that RBI has done this and this, and the IBC that was suspended for the fresh proceedings, it is starting again. It has started again from March 24, 2021 for the fresh proceedings. The creditors can go to the IBC again. So the climate change, what the RBI has done for the climate change. In April 2021, RBI joined the Network for Greening of Financial System. This is a group of the central banks and the supervisors who are willing to share the practices, who are willing to show each other that how the development can be done for the environment and climate risk management, that how we can better manage the environment and climate risk in the financial sector, through the financial sector, through promoting the green bonds, through promoting the green finance. Okay. RBI is also actively conducting research in the field of the green finance and the green bonds, as well as the RBI is also trying to link that how the climate risk is affecting the macroeconomic variables. So RBI is trying to conduct the research and show that how the climate risk is affecting the macroeconomic variables, that is the inflation and growth. Okay. As well as the RBI has made a sustainable finance group that was set up by the Reserve Bank in May 2021, and it coordinates with the national and the international agencies on issues relating to climate change. Okay, to discuss the issues relating to the climate change, to even discuss about the environmental, social and governance issues. Okay, that how it can be brought for the banks and the related regulated entities. So next, highlights of the report. This is the ending. We can say that the open banking was discussed by the RBI in this report, that the open banking framework allow the authorized third parties to access the customer's data with the explicit consent of the customer. See, this can create problems in the privacy, in the customer satisfaction and all. But this is also very important in some areas, and the RBI is thinking about solutions that this can be brought. Open banking can be brought so that the customers can benefit from it, because the third parties will be able to access the customer data and provide better services. But the privacy issue has to be taken care of, the customer satisfaction has to be taken care of, and the risk has to be taken care of. This is said by the RBI. Okay, India has embraced an approach where both the regulator and the market are collaborating, are coming together, because this kind of risky thing cannot be left into the hands of the market only. So the regulator and the market are coming together and towards development of the open banking space, like UPI, Unified Payment Interface, was created by the National Payment Corporation of India under the it was the corporation that created the UPI. Okay, Unified Payment Interface, where the regulator and the market came together. Okay, as well as the API, this programming interface, the application programming interface was created for the banks and the regulated entities by the NPCI, that is the National Payment Corporation of India. So such kind of regulator and the market coming together kind of situation is happening, so that we can provide better services as like open banking services, plus we can also take care of the customers' privacy and all. Next is digital lending. See, there are many digital platforms that have emerged in the that are offering hassle-free loans to the people, to the individuals, the small traders and other borrowers. But there is also problem related to this also, because in recent 1-2 week only, I heard about the news that the digital lending, like RBI banned many digital lenders. Okay, because they were creating problems. Okay, they were trying to fraud. Because through the digital platform it is easy to do the frauds and all. So in this also this is a very good thing about the digital lending, that easy loan is provided. But the problem is, again, it is a network thing, it is the online thing, so frauds can happen. So this is the thing that the RBI, this is the issue that the RBI is looking after also. Next is central bank digital currency. So there was much news about the crypto that cryptocurrency being banned by the RBI, and the RBI is looking after that how we can ban. The government is looking after that how we can stop too much trade in the cryptocurrency, especially the private cryptocurrencies. And so the central bank had said, the RBI has said that we will bring our own digital currency. Okay, so the RBI is looking after this also, but it is still in process. A framework has to be built, a new digital currency has to be built, so it has not come out. Just there is, the RBI is working on it, RBI is looking after it. Okay, so this is the other things that we needed to discuss. Now the report has been completed from my end. If there is anything that you need to understand, do comment below in the comment section, and I will try to cater to that thing also. Okay, so these are the people that have given the right answer of the session about the RBI offline transactions. So Prashant, Sajjad, Keyur, Ashish, Manoj, Adarsh, Gagandeep, Shweta, Yash, Priyanka, M. Rathod, Rajlakshmi, Vanshika, Veena, Penara, Mukesh, Divya, Amit, Satyam, Arvind, Prateek. So these have given the right answer. Well done, you guys. And the right answer was 2000 is the total limit and the 200 is the per transaction limit. So thank you very much. If you have any confusion, anything you want to tell, you can comment, you can mail us here, or you can contact us through this number. Thank you very much.